All right. Welcome everyone to Tuesday's live stream. Hey Adriana, welcome. Nice to see you here. Ooh, 2 likes. Thank you guys, thank you. All right, so if you guys have read the description box already, you guys should know what we're talking about, but let me give you guys a quick summary. So we're just going to be talking about basically what the inflation report for February, what occurred and what the markets and how the markets reacted and why, and kind of my own thesis as to why we've reacted this way. And also, I want to give you guys a free swing trade idea that I gave to my private members today during trading, during the market open. And if you guys want to be a part of that swing trade with us, make sure you guys stick around to the end. Oh, hello, do nothing, hello. All right, so let's talk about February's inflation report. So let's make sure I have my correct data here. So first of all, February's CPI accelerated to about 0.4%, and that was as expected from the expectations of 0.4%. But in January, it was 0.3%. So there's an uptick of 0.1%. And then core CPI, that's the more quote-unquote relevant data that the Federal Reserve tends to look at. Core CPI was also 0.4%, but that was a slightly hotter than expected of 0.3%. However, it was also the same number and data from January's core CPI as well. And so based on headline CPIs, basically we saw the headline CPI going up about 3.2% in February compared to January's 3.1%. And then we actually saw the core CPI for February going down from 3.8 to 3.8% from 3.9%. And so overall, the entire report was telling us that inflation is rising again, and we're slightly moving further away from that 2% target that the Federal Reserve has. And basically, what I personally think about this February report is that it completely substantiates the Federal Reserve's actions going forward in March's FOMC meeting. And if you guys remember, the Federal Reserve has stated that there's most likely not going to be a rate cut in March. And if you guys remember back in January or even back in December, people were expecting March to be the very first official rate cut. But that probability has come all the way back down, and now there is a slight chance, a very, very small and low probability that the Federal Reserve will be cutting interest rates in March. And so if you guys have watched my previous live streams or even my previous videos that I've uploaded, I've countlessly said that we will be seeing the Federal Reserve most likely introducing the first rate cut right before quarter 3 or right in between or during quarter 3, and most likely a lot closer to November's elections, right? The presidential election. So possibly we could be seeing a rate cut somewhere between June to September FOMC meetings. So again, I've said this even last year. I said it early on, I believe somewhere early August, so late July to early August. And if you guys have been paying attention, then you guys know that that's the initial quote-unquote prediction or assumption that I've held for quite some time. And so it looks like we should be expecting that. We should be expecting that to happen. And basically today's February's CPI report clearly told us that the Federal Reserve is not ready to cut interest rates and will most likely just hold them for the next couple of months and for the next couple of FOMC meetings. And that should be expected because, well, the Federal Reserve has constantly said for the past 2 years, since late 2021 into most of 2022, that inflation is their number one objective, right? Fighting inflation. That's the job of the Federal Reserve, right? That's one of the major jobs that they have. And so it makes sense that they want to make sure, for sure, 100%, that the inflation rate will be staying at their 2% or even lower for the next, well, forever. And hopefully this high interest rate environment, this benchmark interest rate that they've had at highs for a couple months now since last year, will do the trick, right? Hopefully. So, like I've been saying to my members the past couple of months as well, that inflation is most likely going to be oscillating down here. It's most likely not going to go back down to 2% anytime soon. It'll be jumping up and down. And I've also told them that early on this year that we're most likely going to be seeing an increase in energy prices as well, which was one of the major reasons why February CPI report came in a little hotter than usual as well and expected. And obviously some housing costs as well. So mostly it's just due to the fact that we've had higher gas prices. And as you guys you guys should know this, food and energy prices tend to be a lot more volatile. So, it's to be expected, kind of seasonality wise as well, because energy tends to trend between around February to early May. And that's another thing that I've told my members about a couple of weeks ago as well, and we've been making some pretty good plays on specific energy plays like oil refineries and just specific major oil companies. So overall, what I generally think is that the market truly didn't care about the fact that the February's inflation report came in a little hotter compared to January's inflation report. That's basically the reason why we've literally again had a very good bounce today at the daily 10 SMA, which is closely trailing by, and also with the daily 21 SMA trailing closely by as well. But overall, just the inflation report, the market just didn't care, right? And we've been continuously seeing this healthy underlying rotation from mega caps to the small to mid caps, so leaders into laggards, and that's essentially what defines a very healthy bull market when we're seeing such underlying sector and money rotations, and that are constant and consistent as well. And so the S&P 500 definitely got a lot of help from that alone for the past month and a half or so, and it definitely did not care about the fact that we've had another hotter than expected inflation report. And that's the reason why we've closed only a few dollars away from all-time highs made last Friday. And it's going to be pretty interesting to see where we go from here tomorrow, since we did have an uptick in volume too, to corroborate this very nice price bounce at the daily 10 SMA. And I want to kind of segue into more of the technical things now. So the S&P 500 has been forming this very, very large macro ascending channel chart pattern, which is inherently bearish. But this is one thing that you guys should know. I sent this a very important message to my members in the private CFO Discord last night. And I told them this, that an ascending channel, yes, it's a very inherently bearish chart pattern where we see the price breaking to the downside. However, the primary objective of a channel, whether it's a descending or an ascending channel, is to provide areas of reversals, right? Pivot points of reversals. If you guys want to be more specific with the words. Okay, so it's basically a semantics perspective there, but you guys should know what I mean. So regarding what I just said there, this ascending channel chart pattern, it's better for you to identify the specific points or pivot points of reversals and trying to play that, rather than trying to figure out where a top is about to form, so that we can see that official breakout to the downside, confirming this very large inherently bearish chart pattern. So that's exactly what I told my members last night, and something that I hopefully will be carried on to you guys who are watching this live stream or this recording, and hopefully that can stay in your guys' brains. moving forward. So the S&P 500 definitely has a lot of relative strength, but we're continuously seeing underlying signs that we should be seeing an overextended pullback to the downside, right? A textbook pullback. And again, my 477.50 target here is still within the means of a relatively textbook pullback. Okay, so let me show you guys here. Oh, if I can respond this here, or actually let me see, there we go. All right, there we go. So obviously, if this percentage move lower from the current closing price continues to get higher and ultimately extends over 10%, that means I have to raise my floor here of 477.50, because a textbook pullback should range from between 5 to 10%. That is the average and historical textbook pullback percentage range that we need to be looking out for, about 5 to 10%. So, for me personally, I'm expecting a 5 to 7%. And so, so far from today's closing price to 477.50, 7.50% is not bad. Right? It's really not that bad compared to this entire run that we've had since October's lows. So, again, I will have to raise the floor here if we see that that difference and distance of more than 10% from the current closing price all the way down to 477.50, and I will have to look for a new daily support level to look out for a potential retest if we do see a textbook pullback. Oh, 4 likes. Hey, welcome guys. Welcome. Thank you guys for the likes. And so overall, the inflation report, it is slightly higher compared to January's report, but based on today's price action, the market has not cared at all. And it's truly telling us that the market has already priced in the fact that the Federal Reserve is not going to be introducing their first interest rate of this year. And we've also been seeing other governors saying that they're most likely going to be seeing only 2 rate cuts. And I think that's pretty reasonable as well, if they're expecting to have the first interest rate cut all the way out into November, or very close to the elections in November. So, it would be very nice if you can see a rate cut soon, but the Federal Reserve likes to be very, very precise, and they want to be very accurate of when they want to cut the interest rates. And they don't want to repeat history where they might cut interest rates too early, or they might have interest rates at highs for way too long. All right, it's a 50-50 seesaw battle there of and as to the reason why the Federal Reserve is looking at this month by month, data by data, right? And if the Federal Reserve is doing that, we need to be doing that as well. Is essentially what I'm trying to point out here. All right, so now we also have PPI coming in this week. I believe that's on Thursday, if I'm not mistaken. Yep. So the producer price index is slightly different from the consumer price index, CPI, and we should be seeing that coming in pre-market on Thursday, and that should also move the markets. And we've been seeing a pretty interesting pattern here so far, where we get a hotter CPI report and a cooler PPI report. And so I would also not be surprised if we see that same quote-unquote pattern of these reports. So if we do see a cooler PPI report, I also don't think the market is going to react too much. We probably will get another gap up at market open. And yeah, I mean, that's essentially what we've been seeing, and we need to be following the trend as always. And the trend, short term, mid term, and long term, is still to the upside. And so as we get closer and closer to the PPI, and also on Friday, this is very important, we have triple witching. It's the quarterly OPEX, right? Triple witching. Some people like to say quadruple witching, but hey, I'm going to stick to the textbook and just conventional terms here. And this quarterly OPEX is going to see a lot of volume as everything kind of expires. People have to buy the underlying equity or stock to cover, and I wrote a lot about this in the market summary for this week of the CFO Swing and Watch newsletter. So if you guys want to join, make sure you guys join. But for the people who are just learning about the triple witching OPEX, just understand that we should be seeing a lot of volume across most, if not all, tickers here. And you should be focusing on what the market is going to be doing in the last hour on Friday. And we'll be seeing a lot of activity, a flurry of activity, and we will be seeing a one-off big jump in volume. And so this week's candlestick is going to have, this week's volume candlestick is going to be very, very large. And that's to be expected, so don't be surprised. And again, the reason why is that we're looking at a quarterly OPEX. Right, this is a triple witching OPEX day. It's not your regular OPEX, monthly OPEX, like in February, for example, right? February. So there are a lot of catalysts this week. We'll be expecting a lot of increases in vol, most likely, even though today we saw the VIX being absolutely crushed to the downside, as we saw the market just cruising higher and higher and higher into the end of the day. And so I expect the VIX to constantly jump around this entire week, and that will cause some day-to-day trading volatility on the S&P 500 as well. Okay, so just as a quick summary for the people who are just coming in, welcome guys, welcome, and make sure you guys smash that like button down below if you guys are enjoying this live stream. Basically, we've been seeing very good underlying sector and money rotations for the past month and a half, and this is very healthy for a bull market. And we've been seeing a very good defense from the markets on every single economic or just data report, very important data reports. And this has caused the markets to be less sensitive to each of these reports, but we could be seeing an increase and a little uptick in that sensitivity in such reports in the next couple of weeks, especially as we head into the March FOMC meeting. And I believe, just a speculation here, that we should be seeing the official more of an official statement and a stance on where the Federal Reserve stands on the first rate cut. And we'll be getting more and more hints as we get closer and closer to Q3 and obviously closer to November elections. So that's something that you guys should be watching out for. Plus, we also have PPI and OPEX, triple witching OPEX this week. So make sure you guys watch out for that. Okay, so hey, welcome guys. Whoa, we have a nice uptick here in people watching. Welcome guys, welcome. So for the people who have just joined in, make sure you guys watch the recording. Go back and start from the beginning of the recording and watch. All right, because I talk about some pretty important stuff that you guys should understand, especially with in relation of inflation and what the Federal Reserve could be doing, and etc. Okay, so make sure you guys watch the recording. All right, so now I want to go over two swing trade ideas from last week's CFO Swing and Watch newsletter, VLO, okay, and SWKS. So if you guys have not watched my previous live stream on VLO specifically, or even my previous video on VLO. And obviously that video is should be shown in my YouTube channel here. It's a pretty recent video, so you guys should be able to find it. But it's titled "You should buy the semiconductor that you should buy next," right, or something like that. So here, let me actually just give you guys the link here. Yeah, so buy this semiconductor next. Okay, so this is a previously private video but now public video that you guys should watch to see why we were looking at VLO and SWKS and why they are still very high quality chart setups here. And so VLO, again, like I said earlier, energy prices continue to rise and the overall energy sector continues to be very strong and a sector of interest because overall energy, utilities, commodities, and etc. are all defensive sectors, and they tend to do well when the market gets defensive, hence the name defensive sectors. So VLO has this really good opportunity to just continuously move up higher and have a nice blue sky breakout, and today it has hit a new all-time high new all-time high price here of 152.35, and I was originally aiming for 152.50. So hey, it's not too far off from my all-time high target here with today's high of the day print. So VLO is something that you guys should be watching out for as it continues to kind of consolidate at this 150.50 daily resistance level that I've also mentioned in that video that I've just linked in the chat room here. And also it seems like we have a bot here, so let's okay, let's remove them here. Okay, perfect. Okay, so this is the ticker that we need to be looking at as well for VLO this entire week. And then we also have SWKS. This is the lagging semiconductor that should do well and has been doing well as we are seeing kind of the money outflow from leading semi stocks, and that kind of pool of money outflow should start to look into more of the lagging semi stocks such as SWKS. And that is the number one reason why I was looking at this one, and well, one of the number one reasons why. The second one would be this very nice looking wedge chart pattern on the daily time frame that has fortunately broken to the upside. So SWKS continues to hold out well, and it should continue to see a lot of good inflow from that money outflow that we've been seeing in the overall leading semiconductor stocks. So SWKS, continue to watch out for it. It has officially closed over this 107.50 resistance level on the daily time frame, which is significant. And if it's able to retest 110 tomorrow and topple the previous pivot high point of 110.60, then we are well on our way towards this weekly 115.50 resistance level. All right. Okay, and last but not least, we have FCX. So this is the trade idea that I want to give you guys for free here. And FCX, I've talked about this as well in my previous live stream. I compared this to uranium. So if you guys remember from my previous live stream here, I believe I titled that live as "The commodities are about to run," if I remember. let's see. Yeah, commodities are about to rage. So go to my channel and take a look at that live stream. I kind of go really in depth into the reasons why I think FCX can become a very good next commodity run. I mean, I've literally talked about how similar it looks to uranium. I mean, FCX is a copper name, and overall, let me actually show you guys copper here, copper futures. So, or just copper itself. So copper has been making a very, very large macro inverted head and shoulders chart pattern here, and based on how uranium has run for the past couple of months, based on how gold has run for the past couple of days and weeks, it would make sense for a major commodity or metal like copper to start running. I mean, we always start to see this kind of cascade of commodities that start to run, and then the next one starts to run, the next one starts to run. And so, you know, with oil running now, it just feels like we're about to see this copper run just based on sentiment alone. It feels that way, but we also have confirmation based on the technical chart pattern on the overall price of copper here. So FCX, with such a large macro wedge chart pattern here that looks awfully similar to uranium, right? So URA is the ticker that we're looking at, really just leads me to believe that FCX can have a really good multi-week and multi-month breakout as we head towards early May, or maybe even to late May. So for FCX, we were able to start a new long position on this one, and hopefully this one works out, since we have attempted initially to short this one to the downside below 37.50, because I truly thought that we could be seeing some type of a retest of this ascending support trend line that creates this macro wedge chart pattern. And once we have retested this ascending support trend line, then we can see a very nice pivot point where we start to see a very large breakout to the upside. So this is what I was expecting to see, but it seems like we're seeing early relative strength on FCX that has allowed the price to really jump. And also, believe it or not, the overall move up higher by the Chinese markets have also helped with copper. And I am not too sure of the kind of maybe indirect or direct relationship that copper has to the Chinese markets, but overall, I've been seeing a pretty direct and positive relationship with copper to the Chinese markets here. So overall, FCX looks really good. It's making higher highs and higher lows, and it should be seeing some sort of a sideways price action for the next couple of days. So a little bit of consolidation underneath 41 here on the daily time frame, as we allow the daily 10 and daily 21 SMAs to finally catch up. And so the official contracts that we're looking at are the 45 strike call contracts that expire on June 21st. All right, so FCX, again, let me repeat that. We have the 45 strike call contracts that expire on June 21st. All right, so there is plenty of time for this breakout to occur, and it leaves a lot of room for the stock to move to, slowly develop enough momentum and enough tightening of the price to finally give a nice large breakout out of this huge and macro wedge chart pattern, just like what we saw with uranium. And again, I am seeing this kind of cascade of commodities breaking out one by one, right? We saw energy breaking out, specifically oil refineries or petroleum refineries, whatever you guys want to call it. We saw gold, we saw uranium, and it will make sense if copper starts out next, right? And also I've also seen steel breaking out as well, right? So FCX here has definitely been a point of interest for all of us in the CFO Swing and Watch newsletter, and it continues to provide some very, very good liquidity for us to have an actual position on this one on copper, since copper is one of the most highly traded commodities here, other than like gold or even steel, right? Steel tends to have a lot of volume as well and interest. So copper really just hits all the check marks of what we want to see for a nice swing trade, right? And not just based on the overall technical chart pattern. I mean, we saw uranium, right, breaking out really well too, and people were saying that uranium should be falling back down as the overall interest in uranium dies down, and overall interest in the fusion reactors or even just fission reactors start to turn down. So obviously we did not see that happening, as we saw uranium just absolutely jumping to highs. But overall, yeah, this is kind of what I think about FCX. It's just going to be one of the next commodities to break out. I mean, just copper in itself, if you guys just search up COPPER on TradingView here, you guys can clearly see what I'm seeing here on the weekly time frame with that massive inverted head and shoulders chart pattern, which is inherently bullish, right? And so once we're able to see a nice breakout, we should be seeing FCX breaking out immensely as well. Okay, so I'm going to repeat this one last time, but FCX, the swing trade that we have is the 45 strike call contracts that expire on June 21st. All right, if you guys are able to go out further on the expiration date, you guys can do that. No one is stopping you. If you guys are more comfortable allowing FCX develop a lot more before breaking out, then hey, you guys can go further out on the expiration date and be a lot more comfortable with holding a position like this, right? So for FCX, again, I do eventually want to see that $45 level being hit, hence the reason why we have chosen the 45 strike call contracts, but ideally, based on my price levels here, I would want to see 46.50 being retested. Okay, so that is our current game plan for FCX. Weekly, monthly, daily, everything, all the higher time frames look absolutely amazing for FCX. And if you study uranium and how it broke out, you will see why FCX, or the overall copper sector, quote unquote sector or industry, looks really, really good. Okay, and make sure you guys watch that previous live stream of where I do a deep analysis on uranium and FCX and how I compare those two, and that's the reason why I find them comparable enough to lead me to believe that FCX can have a nice breakout, or the overall copper names that are publicly trading on the stock market. Okay, all right, so that is it for tonight. Thank you guys so much for watching. I will see you guys on Thursday as usual at the same time, 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And make sure you guys let me know if you guys are going to be joining in on this FCX swing / position trade. Let me know down below in the comments if you guys are watching the recording. But if you guys were able to stick with me into the end of this live stream or even this recording, I thank you guys so much. And yeah, I will see you guys on Thursday, and have a great rest of your night, and good luck tomorrow.